Hey.
Hey everyone, Ryan Bolton here, ryanbolton.com, local mortgage expert, here answering your questions about mortgage and real estate financing. I'm on Quora right now looking at all kinds of different questions on here and thought it'd be fun just to record them and answer the questions live here with you right on the recording. So let's get started. And if you have any questions or comments or anything, I'd love to have you put them in the videos down in the description or down in the comment section, and we can answer them on future videos. So here we go. Can you be scammed by a dishonest realtor or home inspector? Yes, the answer is yes. I Unfortunately, there's bad apples in every single industry, no matter what licensing, no matter what continuing education you have to do, there's still going to be some bad apples out there. And unfortunately, they do happen as real estate agents or happen as home inspectors. So the best tip I can give you is just research, check out their licensing, check out if there's any complaints on them, check if they're bonded, get some references. You're dealing with the biggest purchase you'll probably ever make in your lifetime as a home loan. So why not check out the people that you're working with? So I've been doing home loans in the state of Utah since 1999. I'm also licensed in Nevada. And I think part of the reason why I've been doing it this long is I try to be very honest with my dealings and just really make sure I do right by the client and the agents I work with and everything like that. And to be honest, I just try to do the best job I can with the tools that I have available and just be honest with people. Just answer the phone, be honest with them is much better than trying to hide or be sneaky or tell them something you can't follow through with. And honestly, it's easier on my memory. If I don't have to remember what I said to everybody else and just go with the truth, it usually works out better than trying to come up with a story or try to get around it or just try to dodge it. I mean, own up to when you make a mistake, stuff happens, and just move on and be just a good person. I don't think it's really that hard. All right, let's go to the next one. Let's see. How many people sell their home without a realtor? So I think the numbers change, but I would say more and more real estate agents do sell more properties than for sell by owners is what we call them. But I would still say it's probably maybe 40, 30% still sell for sell by owner. Now, some of that's just family members selling to family members. So that skews the for sell by own numbers as well. I would say if you're a for sell by owner, you're going to get more calls from agents probably than you would from actual potential buyers because there's so many agents trying to find business as well. And here's one other tip. I've been doing loans for a long time. 99 is like I said. And use a real estate agent. Really, almost every buyer that I talk to, if they're looking for sell by owner, they almost always say, well, I can just take the price of the home down because they're not using an agent. Other things I'll look at is how do they know what the value is really good. I want to get a lowball appraisal on it. They're just, it seems like when you have that real estate agent on your corner, in your side, making sure the home is listed correctly, going through the contracts, going through all those things, it's well worth having somebody that does it. But I would say, don't just use any real estate agent. Even if it's a family member, honestly, use the best agent you can because almost all of them get paid about the same amount. Now, there's some variance between some that charge less and more, but the top agent in the county that you live in is going to charge about the same as a newer agent. So it is really something where you can kind of have your cream of the crop, so to speak, for that same commission. And I very rarely do I see somebody that uses real estate agent that gets less for the home if they would have done that on their own. Having that person to go through everything makes a really, really big difference. All right, let's go through what else we got here. How much notice is required to leave a rental property? You'll have to look at your contract. Generally, it's 30 days. I would say that's almost an industry standard. I have seen some where it's less or more, depending on the market that you're in. But it is in your contract that when you have to give notice of when you're going to vacate or not renew the lease, something like that. And I would say almost all of them default to 30 days. So I would say that's probably the most likely answer, but check your contract. Let's see. What should home buyers expect after the seller accepts their purchase offer? So what should the home buyer expect? So in the contract, you're going to have dates that determine when certain clauses kind of kick in or expire. So the next step you'd want to do is your due diligence. You're going to get your seller disclosures that are going to tell you everything that's happened with the home. So these are whether it's flooded or somebody passed away or if they've had any issues or repairs, remodeling. It's in Utah, it's a pretty long little 50 question thing that the seller checks yes and no on all these boxes. Anything they usually check yes on, you want to double check. So if there's been a flooding or a remodel or an extension added to the house or anything that's happened while they lived in the home, you want to maybe double check those things or maybe have a inspector or maybe go back and specifically look at those things. When you're walking through the home for 10, 15 minutes, you're not going to catch all the things that may be hidden, or repairs, or a bathroom that's flooded, or a kitchen that's had a remodel, or one of the ones you'll run into is if the seller like enclosed a patio or a garage and turned it into a bedroom or a bathroom or something like that. If that wasn't permitted or zoned or done correctly, it doesn't add to the square footage. It can be a problem down the road. So when you're doing the seller disclosures, that's kind of that first step. Then you want to do home inspections, work with your lender on when to order appraisals and things like that. But you really, as a home buyer, you want to be aware of those deadlines. You want to know when those things expire and when you need to move on to the next step of each file. So the home buyer, what they should expect is start working with your loan officer and your real estate agent to know these deadlines and to work with contractors or home inspectors or appraisers to kind of coordinate all this stuff to keep the file moving to where you don't miss any of your deadlines. If you pass certain deadlines, that's when your earnest money is at risk. Before that point, you can cancel and still get a refund. So you really want to be aware of those dates that are in the contract. Let's see. Here's a question on here. Will someone give me $10.62? Sure, maybe. I don't know. I wonder why that's in this section. That's funny. I love this little website. I think it's a lot of fun. It's called Quora. It just has a ton of questions on every topic you can think of. So I would just pull up like the real estate and mortgage questions, and that's usually what I go on. So will someone give me $10.62? I don't know, will you? I'll send you my Venmo and you can send me $10. Let's see. Here's a good one. How hard is it hard for real estate agents to get mortgages? The answer to that is yes, because most real estate agents are self-employed. One of the benefits of being self-employed is writing off all your mileage, your gas, your food, marketing, all kinds of things that open up that you write off as part of your business. So generally speaking, real estate agents are self-employed, try to write off as much as they can, that making their taxable income as low as possible, which makes it harder for them to qualify for a loan. But it's no different than a landscaper or a builder or somebody else that's also self-employed. So just because you're a real estate agent doesn't make it harder than other industries, other than you're lumped into that self-employed industry, which does get a little bit trickier in how you verify your income. Also, a lot of real estate agents are very commission based, where they might make a bunch in a month and then nothing for 2 months. So it's really a feast and famine industry. It really is, where it's just can be big commissions, but it can be gaps. I mean, big gaps in between it. In fact, I think the National Association of Realtors actually showed that I think it's like 6 transactions a year, I think is what I saw recently. So you got to figure that as lenders look at that and they say, okay, they didn't make any income for 2 months, but then they made 10 grand. Then they made nothing for 2 months, and 10 grand or whatever that is. That's where it can be harder to get qualified for a loan. But that can be the same thing if you're selling airplanes, or you're a contractor or a landscaper, or somebody that's 1099, that's self-employed. It's just a little more hoops to jump through. Now, we do have lending options where we don't need tax returns for self-employed borrowers, depending on the use of the property and depending on down payment and credit score. So some of those options are starting to kind of expand and come back a little bit. I don't know if we're going to see a stated income loan or like that again, but there is more limited doc or limited ways to be able to help these people. And I think that's a really good thing. If you got a 800 credit score, been on the job for 10 years, and you're putting 40% down, we shouldn't say no just because one box is a little bit lower than the other boxes that we all need. So I think that program should start to find a way in the marketplace, as long as it's offset with the other compensating factors like credit score, down payment, time on the job. All the other things are positive, great, A+, and then income's just all written off. There's got to be some option for that type of borrower. All right, let's see. What is the best property seller and purchaser? What is the best property seller? Well, one that'll sell, a property that'll sell, best location possible, great price. What does Home Depot do with the houses they sell? What does Home Depot do with the houses they sell? Well, they make money versus what they paid for them, just like anybody else. Okay. If your father is a landlord, what are you? A sunlord. Well, if your father is a landlord, what are you? Well, you're the son of a landlord. I love these questions. They're great. Let's see. What can I do if the house I'm buying is not complete in a reasonable time frame? So it depends on the contract. Again, they have certain time frames. A lot of times they have outs. The builder has outs in case there's supply chain issues or there's builder issues. Or a lot of times the builder subcon is subbing out some of the work, and if there becomes a problem there, they got to find another sub. So sometimes that can delay the process a little bit. So it's usually built in the contract, but a lot of times the contracts for builders are set to protect them a little bit more if the time frame does go longer than it's supposed to. But that's part of just signing the contract and knowing what your outs are and what your repercussions are. I mean, technically, if it gets past certain contract dates, you can get out of buying the home, get maybe refunds of earnest money. There's some refunds you might be able to do there. But most of the builders contracts are designed to have some protections if stuff does go wrong as far as the time frame. So really, it's just work within that contract. I think it's far better to work with the builder, realize that stuff happens, especially in the last couple of months and last year, and just be reasonable with it. I mean, I know it's a high pressure situation. You've got to move out. You've got to start a new job. I mean, I've seen stuff hit the fan like crazy on real estate transactions. But I think most of the time, if you know the why behind the delays, then it's a little bit easier to understand instead of just screaming and yelling no matter what the builder says or the agent says. They're human too. They know what's going on. They want you to get in the house. Stuff happens. But it is something where if you can be at least reasonable with it, know the why behind it and go into it that way. Worst comes to worst, look at the contract and see if you can get out of buying the home if you have to, or get a discount on the home, or see if you can work out something. If you go into it with that attitude a little bit more often than just screaming and yelling and being upset, it's going to be better for everybody. It really is. And I just see too many times where these things just blow up more than they really need to be very honest with you. It's something where, and it's just because there's so much emotion that can be tied into these things. But I think if you handle it with a little more poise, a little bit more integrity, just a little bit more, that kind of thing, I think it's always better. The last thing I see is the clients will start just screaming at the builder. Well, the builder stop answering the phone call or won't be as quick to answer it because knows it's just going to be a hassle and it's human nature with that. So sometimes it's just better to kind of treat it with a little bit more kindness, a little more grace. I think we need in this world more than anything, just a little bit more grace, a little more understanding, and just getting to the why. And I think you'll get to the what when all that stuff gets resolved. How are we doing on time? Okay, we'll do a couple more here. This is fun, isn't it? I like having fun with this. But if you're having fun, please subscribe, comment, like, subscribe, all the YouTube's terms. I'm still kind of learning how all this stuff works. But I'd love to have any comments. If you want to put a comment down there or a question, I'd like to kind of gather a bunch of those up and do a video dedicated to those. But I'd love to have your questions and your feedback. All right, let's find out what else we got here. Let's see. What job allowed you the income to buy houses with cash? I bought a bunch of houses. I still own a bunch of houses. I have a bunch of rental properties. There's no way I would pay cash for a house. You can get better rates and terms. You can leverage that money better. You can take the same amount of money and buy 2 or 3 properties with it than just buying one property with cash. I don't know very many people that are really in the real estate investing world that are tying up all their money on one property. Just like you wouldn't put all that money in one gold bar or one stock or one cryptocurrency or wherever you're putting your money, you wouldn't put it in one. So, but I see in real estate all the time, I'm going to just pay cash so I don't have a mortgage. Well, if you put $100,000 down and have $100,000 in the bank, your rent's going to cover that mortgage payment. And when it doesn't, you still have the money to fall back on. Or if you put it all in the house, the only way you get the money back is selling or refinancing the home. There's just no reason to pay cash for a home. There really isn't. There's so many other places you can put the money that gives you better leverage, gives you better terms, gives you ability to buy more rental properties, which debt flow is even better. I mean, you look at anybody that's doing any kind of real estate investing, they're not paying cash for houses. No way. In fact, they're trying to put as least amount of money and still cash flow as possible. Cash flow is king on this stuff, not equity, because you can't get to equity without selling or refinancing a home. But you can get to cash. You can get to your bank account. You can get it invested in other places. And people say, well, I don't want a 6% interest rate. I can't get that kind of return. Well, can you buy another rental property? That appreciates better than 6%. Can you just have it in emergency funds? What if the renter trashes the place and you need 10 grand for carpet and paint? Then what do you do? And I'm telling you, having money in the bank is way better than having a bunch of equity. And having more properties is better than just having one free and clear. So I hope that answers that question. All right. How can I find a list of people who are interested in buying a home in the United States? Boy, if you got that list, send them my way. That's what we're all looking for, is home buyers. We're all looking for people that are out there trying to buy homes. We're trying to help them with financing. That's the job of most real estate agents. That's the job of every mortgage company I know of. That's what we're all trying to do, is find a list of people that are trying to get pre-approved or trying to buy a house. So if you find that list, send it my way. All right, what else we got? What should home buyers keep in mind before buying a condo? So, condominium projects or townhomes are a little bit different. There's different terminologies with them, but a condominium project is typically the land is owned by the HOA itself. The building is what you're actually owning. And they'll have some sort of HOA, which is a homeowners association. So there'll be dues that you pay into the HOA to cover the general expenses of the property. So for instance, if the condominium project has a pool, well, who's going to maintain that? Well, all the owners chip in to cover the cost of maintaining the pool. Um, Maybe the condominium project has a landscaper that comes by and just mows the lawn every year and checks the sprinkler systems. That's probably the most common thing you see in HOAs, is some sort of general area cleanup and landscaping and stuff like that. Or there'll be common areas with pools, tennis courts, basketball courts, things like that. So also condominium projects, because they're attached, will generally have a insurance policy that covers the entire building. That way, if unit A burns down the house, then all the other units are rebuilt. So usually there'll be insurances there as well. Also with condominiums or anything that has the HOAs, they usually will have other rules within just that neighborhood. You'll have the city rules, city ordinances. They'll usually layer on top of that, maybe that you can't put a sign in your front door, you can't park the car on the front lawn, or you can't park cars on the streets. I mean, I've seen all kinds of different rules. So the best tip I can give you if you're looking at buying a condo is check out what's known as the CC&Rs and check out the HOA. A lot of these HOAs now have a management company that actually manages all this stuff, and they pay them a small fee out of the HOA instead of just actually the homeowners having, sitting there on doing the day-to-day operations. Now, you'll still have a president, you'll still have a secretary treasurer that's part of that. And I would say if you get on the HOA, join and volunteer and be a part of the decision making of your HOA. That homeowners association is the other homeowners. It's not like the president is some guy somewhere else. Now, the management company might be different, but a lot of times the people that are always voted in as president and secretary and treasurer are almost stuck in that position for years. But they're your neighbor. They're one of your neighbors somewhere in your subdivision. So that's kind of the tips I would say. If you're going to buy a condo, check out the HOA, what's covered, what restrictions you have with your property, and just know that going into it beforehand. The last thing you want to do is buy into a condominium project and then find out you can't change the color of your door, or you can't park car. You just want to know what those rules are. Just go into it wide open when you're doing a condominium project, because there will be those things that will come up. All right, let's see if we can find, how are we doing on time here? You know what? We're going maybe a little longer than normal, but you know what? We're having too much fun. We're going to keep going. How about one more? Let's see. Why is that most houses in US are not fenced? I wouldn't say most are. I would say most are fenced. I would say a lot of them at the beginning might not be, as just a way for the builder to be able to kind of get the home done, let you do your own landscaping, let you do your own fencing, stuff like that. So that's an interesting one. What would you guys think? I would say most are. In my experience, I would think most are, not the other way around. But why they're not is just the expense of doing it, and it's something where it costs money to put the fence up, and it doesn't really add any value. It's not like the builder is going to get more value by putting a fence up than not, generally, versus the cost to do it. Yes, more people are going to want that fenced yard, but it doesn't all of a sudden raise the price versus the cost it does to do it. So it's usually something that just gets added later on. And I do see here, at least in our area, the front yard gets landscaped, but the back doesn't. So then finishing the backyard landscaping and then adding the fence is kind of the finishing touch instead of putting the fence up. Then you try to do the landscaping and you got all the fence in the way. So I think that's more of a new build kind of thing. But I would say most, I really would think that, why is spelling on that's horrible, but I would say most are. I really would say most are. All right, let's do one more. Let's see. What are the advantages of home ownership to apartment rental? So maybe that's just the difference of renting versus owning. I maybe that's what it is, but if that's not what it is, that's what we're going to talk about. So what are the benefits of owning versus renting? Everything. Do you have a pet? Well, you can't have a pet with a rental. You can have a pet with a home ownership. You've got the tax benefits with it if you qualify. You've got home appreciation. You've got tax benefits. You got pride of ownership. I'm telling you what, there's something about owning a home that's great. It's yours. You can change the paint in the living room if you want. You can customize it the way you want. You can put your pictures up on the wall. You don't have to worry about just all the stuff that's yours. Usually you have a little more space than if you rent. Usually not right on top of other people, and you've got a little more privacy. You've got maybe a garage and things you wouldn't have if you had a rental property or an apartment rental, that kind of thing. So there's just something about home ownership, and that's one of the best parts of my job is I get to see people go through this nerve-wracking experience of trying to buy a home, whether it's the first time, second time, 10th time, and it's really a fun part of the job is to help them coordinate all this, because you're not supposed to know how this stuff works. That's why I have the show. That's why I do what I do for a living, is educate people on what it takes to buy and sell real estate. And I get to go through that every single time, the nervousness of doing it right and wrong and answering the wrong questions and all that kind of stuff. But owning a home, there's a pride in that I don't think you can replace with just renting, or just, it doesn't feel like you're just kind of throwing your money away? Doesn't it really just feel like when you write out that check for $1,500 that's just giving you the right to use the house for the next 30 days versus writing it out to your net worth, writing it out to your equity, writing it out to tax benefit, writing it out to a place that is yours? Now, I've had people say, well, it's not mine, it's the bank's. Absolutely not. Yes, the home is collateral for the loan, but they don't own your house. They can't just come in and say, hey, we're going to use your kitchen today. Of course not. That would be stupid. You own it. You just have that collateral against it, and you're going to have a housing expense either way. Why not own it? I use this phrase all the time that when you rent, you do have a mortgage. It's just somebody else's. Why not have your own? So yes, it's nervous about the market and economy and rates and what's going to happen, all that kind of stuff, but you're always going to have a housing expense. Why not own it? At any time there's been this housing correction or any kind of changes, we bounce back from it. And again, you're going to have that payment every month, $1,500, $2,000, whatever it is. Why not own the house instead of just renting it? So hope this video was great. Please comment, like, subscribe. Let me know if there's anything we're doing right, doing wrong. I've added a microphone to make the audio a little bit better. I'm trying to get a little better camera. I'm trying to have a little bit of fun with this, but I really would love the opportunity to talk with you. If you ever need help with a mortgage loan in the state of Utah or Nevada, that's where I'm licensed. You can go to ryanbolton.com, start your application, or there's a little scheduler there where you can just book an appointment to talk or meet in my office, whatever's easier for you. And love the opportunity to help you with any kind of home loan that you might need. So appreciate your time, and hope you enjoyed the video. Thanks again.